Hello, everybody. Welcome back to accounting class. You guys thought that you were out of it. You thought that you were going to have these active God days the whole way out, but accounting, as we have learned, is like herpes and never goes away. So, today we're going to pick up right where we left off with the conversion process. Um, Really what the conversion process is how as accountants do we keep track of where everything is like as we build it and what costs have we incurred and kind of applying those costs. We'll deal with that more in a little bit. um, I'll show you guys this PowerPoint. There's a worksheet for you guys to do that's going to be due on Friday. There's 2 pages to it. One is really easy. It's like go up and down, and the other one's a problem. I made some T-charts on there for you. Just make a copy of that Google Doc, and you should be able to write directly into those T-charts just because like it's a literally just a chart with different cells on it. So it should be pretty easy for you guys. If you get stuck, just let me know and email me and I can help you out. Um, Also, at the very end of this, there's some Amazon links. Um, I just think it's really cool about like what their conversion process looks like, but we'll talk about that more later. So, two big things to take away from today. You should understand what the conversion process is and how things flow through that conversion process. Oh, by the way, that is not a shadow which you see on my face. It is a mustache. That is helping me be a better teacher. It's a quarantine stash. I'm going to grow it until I can go back out into society. So, Senora Walk says at which point we may not be married. So, we do three things during the conversion process. Uh, First off, you buy the materials, you convert them, and then you have to store them. Like that is the conversion process. You put them in, so you don't necessarily buy them. I guess buy them is a bad way of saying that because you do that during the expenditure process. What you do is you obtain them. So like you have to write a requisition. So like let's say you're a company and you make nails. You have like somebody else buys all the materials. You say, okay, like we're ready for this material now. Give it to the machine operators. So the uh, the big thing that you need to realize is the first place that things go is into direct materials. So things that you haven't touched yet, but you have, so like you've purchased them, they go into the direct materials account. Again, we've talked about what direct materials are. These are things that you can touch and are like traceable and used in the process. It is an asset because you could easily resell them. Um, when you buy more stuff, you get more of it. When you take stuff out of direct materials and start working on it, it is no longer a direct material. It is now in the work in process. And short, what that is just everything that isn't raw materials and isn't finished is work in process. I think of it like buying an IKEA table. Like as soon as you take it out of the box, it's not, a raw material anymore. You couldn't resell that as a raw material. It is not. It is an IKEA table, but it's not a table yet because it's not finished. It's a work in process. And so, like this couple that is living what Senora Walk and I have experienced many times of like a marital trial of assembling furniture, you know, that is a work in process. Again, work in process is still an asset account. When you start making stuff and you take out those direct materials, that is going to increase this account. When you finish goods, that is going to decrease this account. Now, the weird thing about work in process is that you have to apply costs to it as you go, and you'll get more and more into this as we go along. But like you have direct labor, that's going to go into it. You have manufacturing overhead, that has to be applied to every good. So those are all costs that go along with it. After you are done, you have the finished goods. The big problem with finished goods, as we've talked about, is you have to store them. So you like this is a real picture of what Amazon used to look like. They used to have like mountains of warehouse boxes that they would have to go through. When you sell those finished goods, they are now essentially sold and gone. So how does everything go? What's the flow of the conversion process? Well, you have these direct materials, things that you're going to use to directly make something. So, like the jeans fabric, if you're making jeans, there's always going to be some type of beginning amount that's in there. As you buy more stuff, that is going to make it go up. Then, as you take things and you issue them into production, that is going to decrease it. What you have at the beginning plus what you purchased minus what you used is your new amount. The work in process does the same thing. As you have your beginning work in process, which you already had, plus you brought new stuff in. Then you also incurred a cost of labor. You have to apply that. Then you have to apply manufacturing overhead, which seems very complicated right now. Don't stress, we'll get there. We're just kind of hitting the big overhaul of it right now. Then when you finish stuff, it makes it go down. Then you have your final amount. The last thing is your inventory, like your finished goods. So you have your beginning inventory plus any new stuff that you finished minus all the goods that you sold equals your ending inventory. So in this example, we have these beginning inventories of 10,000 for direct materials, 5,200 for work in process, and the finished goods of 16,500. During this time, we purchase some direct materials. It looks like we take some direct materials and we put them into production. We use $5,700 of direct labor and $7,000 of manufacturing overhead get applied. We have the cost of the goods that were manufactured and the cost of the goods that was sold. You will figure out in just a little bit here and see just how easy it is to know where all of your money is. If you're running a business and you don't know where your money is and what you have done and how much you've sold and what you have in direct materials, you really don't know what's going on. Um, this gets for service industries. So like let's say you're a dog groomer. Like this is not a big deal. But let's say that you're doing something like where you're making furniture. You need to know exactly where your money is and how it's being applied. So what does this look like? We go back to our old friend Mr. Chi chart here. So I put the question at the top really small just so that way we can reference it. So our direct materials, we started off with the 10,000. We purchased 17,500 right there. So we start off with the 10,000 and we purchased 17,500, but we also issued 19,000 of direct materials into production. So took that 19,000 out of direct materials inventory and slid it over. So that is making this get smaller. This is an asset account. We credit it. You add it up. There you go. The next place that we are going to go is work in process. Now, again, we had $5,200. We brought $19,000 of direct materials in, so there's our original amount. We brought in $19,000 of new materials. We used $5,700 of direct labor, so that has to be debited in. and we have $7,000 of manufacturing overhead. All of those things are costs that have to be applied. You know, if you were thinking of it from an expense standpoint, you would credit those, and so therefore you have to debit them here. Um, then you have 2,600, excuse me, $26,900 that are taken out because they're finished. So it says the cost of goods manufactured for the time period was 26,900. So again, that amount is no longer being worked on, it's gone. Finally, we have finished goods. So we saw that we brought in 2,000, excuse me, we brought in 26,900, 26,900 plus the original 16,500 that we already had. And then we sold 28,400. So again, you can see beginning plus our additions minus our, takeouts, our sales at this point gives us a new result. What you are going to do is for Friday is you're just going to do those 3 T-charts. This is a super simple, extremely similar example, so it shouldn't be too complicated for you. Make sure that you're doing everything. Like, what messes people up is they always want to credit these uh, direct labor and applied manufacturing overhead. That's a debit in the work in process because that's where you incur those costs is while you're working on the good. Make sure that you guys go through and you finish this up. Make sure that you also do the first page of that, which is which makes each account go up, which makes each account go down, and then examples of the type of transactions that would do that. So like I buy nails or something like that. Um, Whatever you can think of, it's all good. You should be able to make a copy of that, fill it out, and put it in. Again, I'm going to put these links up on Classroom when I post it. It's not a requirement by any means. I think we might have actually watched one of these videos already. It's just super cool because when Amazon does, like, the person goes out to pick the stuff, that is their conversion process. So this is really neat. Again, guys, you have questions, let me know. Hope this helps you out.